You're listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone, from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth. This episode is brought to you by Mashvisor. If you want to find top performing properties quickly and easily, check out mashvisor.com/acres. Use promo code ACRES to save 20% on industry-leading investment property search and analysis.
Hello, I'm Deidre Woollard, an editor at Millionacres, and thank you so much for tuning into the Millionacres Podcast. Today's guest had an experience that I've had as well. He sold his home, then he learned a few years later that his home had appreciated by several $100,000s more. Losing that sort of money is painful, but when you're ready to move on, there aren't a lot of options out there. David Friedman, co-founder of Knox Financial, wants to change that. David Friedman has more than 15 years of experience starting and leading technology companies in Boston. In 2018, he co-founded Knox Financial, a fintech company offering homeowners a smart and frictionless way to build wealth. A homeowner who's ready to move or a landlord who already owns rentals can put their property on the Knox frictionless ownership platform, and then Knox turns these properties into passive investments. Well, thank you for joining me today, David. We actually met before when you were with Boston Logic, and I was working on real estate PR, probably at an Inman conference or something like that. So how did you go from that world to what you're doing now?
Building that company, I learned a lot about real estate data. And Spencer, who's the co-founder of Knox, he and I worked together at Boston Logic, and sort of over lunches and beers, we'd come up with a data model. We're data nerds, and we had this data model, and it didn't really have use at Boston Logic, but we said, this is the foundation for a lot of things we could do with this data model, and it's more or less the intersection of people and property. And so we sold Boston Logic, and that company now owns a bunch of companies in the real estate software space. And I moved on, and Spencer and I had lunch one day, and we said, we should build something on that data model. And he and I had each had this experience that you just mentioned, where we'd owned homes and sold them and regretted doing so. And we figured out, using that data model, we could identify everyone who should hold on to their property when they move and turn it into investment. And it turns out it's the vast majority of the population, actually. And so it was two guys over a few lunches and a few beers, knowing the property data world, building a data model, and then having this experience and sort of looking back at it and going, we just sold the best investment we've ever made. Who sells their best investment? We should make it easy to hold that investment. And that is Knox.
I think that's so smart, because I had that experience. I owned a duplex in Watertown. I sold it, made a profit, and I was really happy about that. But then, I looked at it a couple of years later, and the person after me made an even bigger profit. So is that sort of what happened to you?
That's exactly what happened to me. I owned a condo in the south end of Boston for 10 years. It was my 20s home. Yeah, I had all the best parties and met my wife while living there. And, my investment there, I'd put down $100,000 when I bought it. When I sold it, I'd turned that $100,000 into $350,000. That was a lot of money to me at the time. But I was still thinking, why am I selling this? This is my best investment. But I had a day job. I was running this startup called Boston Logic, and I had to sell it. My wife and I had too much stuff to live in her place or my place, so we bought a new one. And I looked back 4 years later when the new owner sold it again, and they had made another $200,000. And I said, somebody stole $200,000 from me. That's robbery. And it was younger Dave stealing from older Dave, right?
Exactly.
And I told the story to Spencer, and he'd had the same experience moving from Vermont to Boston when his wife got into grad school. And we said, why? Why are people selling great investments? And we thought about all the other investments we make. And when we make them, we call a guy. And that guy or gal is at a great brand like Goldman or UBS or Merrill Lynch. And there is no equivalent for property. And that is Knox.
Well, I think part of that too is a lot. And when I was ready to sell my place, a lot of people said, this is a great property. You shouldn't sell it. And I thought, well, I don't want to become a landlord.
Right.
So do you think a lot of people are going through that same process where they think, well, I would like to hold on to it, but I need to move on, and I really don't want to be a landlord?
We think that happens literally a million times a day. We know it happens. I mean, we've run the data, we've run the surveys, we've talked to people. It happens all the time. And what's interesting is if you want to invest in equities, you don't buy a share of Microsoft and go to work at the company.
Right.
But classically, if you want to invest in real estate, it comes with a part-time job. And if you buy a bunch of properties, it becomes a full-time job. We don't think that's the way it should be. So one of our founding principles at Knox is we would make it as easy to buy and own investment property as it is to own a share of Apple or Microsoft.
That makes sense. So, as I understand it, you guys handle property management, the books, rent collection, taxes, and then you charge a fixed fee of 10%. How did you arrive on that as the right percentage?
Sure. So we do a lot more than that, but that is a bunch of the things we do. First of all,
Well, please tell me more of what you do then.
the first thing we're wealth advisors for property investors. So a big part of the value we bring is helping people understand their investments and their options. So what does refinancing look like? What does insurance look like? How do you make the property produce more revenue and more profitable? How does an entire portfolio best perform? And best performing is different for each client. So it depends on your investing goals and your time horizons, et cetera. Some clients are looking for tax shelters or cash flow or ROI and value growth, and we can help make portfolios perform towards those goals. Next, when you work with Knox, you no longer need a bank. You no longer need a credit card for that property. You do not need to figure out your taxes. We do that for you as well. We find you the right insurance. We optimize the property towards best outcomes physically. So whether that's a new kitchen or adding a bedroom or what have you, we handle everything from leasing and legal all the way straight through to payouts and tax reporting on the financial side as well. Literally, you get to sit back, kick up your feet, and become a passive owner of the investment. There's nothing that you have to do other than DocuSign a lease every now and then.
So, does each property end up in a separate LLC, or are they all part of the Knox platform?
Whether or not it's in an LLC is up to the customer.
Okay.
And some of our customers have multiple LLCs. So in our software, that's just a different tax ID. So we're pretty agnostic to that.
Interesting. So, I also noticed that you pay quarterly instead of monthly. So, why is that?
So what we do is we settle up our reserve accounts quarterly, but if somebody has a very profitable property, we can distribute a fixed amount monthly. So what we do for clients is we hold a reserve account. Any good property investor is holding a cash account associated with that property. So that is part of how our platform works. If you have a profitable property, at the end of the quarter, we would send you the net profit. If there hasn't been a profit and the balance has declined in that account, we don't send you anything. If let's say you have a portfolio that's profiting, $5,000 a month and you're living off of that, we might set up a quarterly distribution of say $4,500. And then there might be, a few repairs. At the end of the quarter, we would settle up that account to a pre-established balance that we aim for.
Interesting. So, in terms of that balance, how is that set up? Is it sort of standardized across properties? Is it a percentage or does it vary?
Has to do with the monthly operating expenses. We generally like to keep a minimum of 2 months operating expenses in the account. If you have low operating expenses, it's generally a minimum of $3,000. If you have a lot of units, it's not $3,000 per unit. It has to do with what would be a normal scenario of let's say you have a portfolio of 10 properties. You're probably going to have some incident, say every month on average or something like that. And we would make sure there was capital to cover those without having to reach out and ask the client for capital infusions because of ups and downs in that account balance.
Is there a cushion for emergencies, like if a water heater blows or something like that?
Exactly. So that's why the minimum is 3,000. A water heater, let's just say it costs you $1,000 in time and materials. You should have that in your reserve account at Knox, and it shouldn't hit your day-to-day cash flow. Most of our clients have their life and the ups and downs of their checking account, they would rather not see that affected by their investment property portfolio.
Interesting. So when they're holding these properties, is it the same as if they had a rental property portfolio? Do they get the same tax benefits, like depreciation and deductions?
Yeah, absolutely. In fact, one of the things that we find when we have portfolios come onto the platform is often private landlords are not good at getting all the deductions they deserve. So with Knox, every penny flows through our platform: mortgage, taxes, insurance, maintenance, condo fees, you name it. And we make sure that every expense is deductible, is on the statements and it gets deducted. Also, we help you on the math on how to depreciate the property itself. Another huge tax advantage we help a lot of clients with is estate planning. Appreciation of a property can be a really large taxable event. A lot of people, unfortunately, in advanced age, sell property they own. Either they lived in it, and they have huge. You might have lived in a home for decades, and you bought it for a few $100,000. Now it's worth a couple million. You've got a huge taxable event, and you sell it when you move into like assisted living. And that's a huge generational wealth mistake that a lot of families make. And if they put the property in our program for a while and then the home is inherited, the gains in the lifetime of the original owner are not taxable, so long as the estate's worth less than $20 million. So for most people, that's a huge tax shelter.
Yeah, absolutely. And I think that the aging of America is something that I think a lot of people are concerned about. So far, people are wanting to age in place, but as our baby boomers get older, the likelihood of them being able to do that in their 80s gets less and less. There's all that talk about what they call the silver tsunami, that there's suddenly going to be this flood of houses on the market. Is that something that you guys have been looking at and thinking of as something that's going to become an event?
Tsunamis are quick. It's like a multi-year, it's like a decadal change in society.
Yeah, it's more like a slow wave.
Yeah, I think if you look at the building rate in the senior housing world, COVID notwithstanding, there's an amazing amount of building of retirement communities and assisted living and nursing. That industry has grown by multiples in the last 25 years. In our view, you're going to see a lot more of that building, and a lot of people are going to continue to move into those environments, and that's good for Knox.
What about a 1031 exchange if someone had a property in Knox and then they wanted to get a different one and be able to avoid that tax event that you mentioned?
We're big fans of 1031 exchanges. The question is, for us, we are helping clients maximize their equity, and again, towards the investment goals that they have. So a 1031 makes a lot of sense if you think the property you currently own is not the best property for serving your financial goals. What we do have is an awful lot of customers on our platform who want to grow their portfolios. So often what we can do is find another customer who wants to take that property, and we do that transaction at a very low cost for all parties. So one property shifts to another customer, and then the customer who used to own it 1031s that equity into a new property. It's a fantastic strategy.
That's really interesting. So is Knox also benefiting from some economies of scale because, for insurance or repairs or things like that? Is that also part of what you're doing, is that you're working with particular contractors and things like that?
Yeah, absolutely. So that's a big part of the benefits to the investors who use the platform. As an individual investor, even if you have a dozen or 2 dozen units, you don't really have a lot of buying power. Versus the institutional owners, the institutional real estate in rentals in this country is like 25 million homes. That institutional property market, they have buying power. And our scale allows us to bring that buying power, that advantage to small scale landlords.
Interesting, because it's not dissimilar to what some of the iBuying companies are doing, where they're starting to build those networks of people that fix the houses.
Yeah, absolutely. I mean, if you look at, let's just say, uh, Open Door, right? If they're renovating 50 homes a month in a given market, they obviously have some buying power in materials, in contractors, et cetera. And we're getting to the scale where our vendors are now asking us, "What's the next city you guys are going to launch? We want to be there when you do, because you guys are bringing us work, and we're a good client."
How long does it take to get set up on the platform? Is it sort of like iBuying where you need to have repairs done first? And how long then does it take before the owner, starts receiving the income?
So to get set up, it's kind of like signing up a property for Airbnb. You go on our website or you go into our app, and you upload a bunch of information, and you're kind of off and running. You get assigned an account manager. We actually go to the property and do a 200-point data intake that the homeowner doesn't have to do. So we take in everything from the year, make, and model of the fridge to a photo of the electric box and the material of the roof. It's all in our database. We have professional photography taken. This takes a matter of days. Pretty soon it's on the market for a renter if it isn't already rented. A lot of properties come in and they're already tenanted, and those are on in a matter of days or weeks. Once we have a tenant in there, at the start of the lease, the property is on our platform. So again, it's usually just a matter of days.
Does the owner get an estimate of the income before they sign up? Is it like that where you can sort of find out what your property would earn on the platform?
Absolutely. But we go several steps beyond that. Just like those financial brands we were talking about earlier, when you meet with a financial advisor, they're going to go through numbers and charts and graphs and help you understand how your money can work for you. We do the same thing, but with property. So we've built financial analysis software that we used to sit down at the kitchen table with a customer. Now it's Zoom in the COVID world, and we show them the numbers and we show them what their properties can do and what their portfolio can do. We might show them the impact of a refi. We might show them the impact of a sale and acquisition of other properties. There's a lot of scenarios depending on the customer, but it's not just rental income. It's net cash flow, it's rate of return, and any number of other goals, tax shelters. I could go on.
How would this work if potentially you're a move-up buyer? Would you potentially like refi to pull some money out to get your down payment for the next house, or how would that work?
Sure. So there's sort of two scenarios. Some move-up buyers have the capital they need to put the down payment on the home they're going to buy, and so then they don't need to refi. And some percentage do refi. In fact, it's super common for Americans to refi anyway. Americans are inundated with marketing from banks and mortgage companies, right? So a huge percentage of customers that we talk to have refinanced. I mean, the number of mortgages written in 2020 was insane. So people are pulling capital out, turning equity into cash out of their homes on a regular basis. And often they've already done that when they come to us. And the ones who don't, we can help them with one of our partners find the right note to refinance and get the cash they need for a down payment on the next home.
About how many properties are on the platform already?
North of 175, approaching 200 now.
Just in the Boston area, or are you starting to expand?
So we're operating in 5 states now, 4 major metro areas. So the Boston area, if you know Boston, includes the state of Rhode Island and half of New Hampshire. So it's sort of that, metro region. And then we also operate in Texas, in the Dallas and Houston markets, and in the greater Atlanta area and Georgia as well.
What were the decisions for moving to those markets?
That's a great question. We look at a number of factors when we decide to launch a market. Some of them are quantitative. So we look at numbers and how many people move every year and rental rates and things like that. We also look at whether or not we can get data to do the data work we do in that market. And some markets, we simply can't find a data source. We also look at our maintenance agreements, and do we have a maintenance partner who operates in that city, in that state? And then there's a bunch of legal considerations as well. We own a real estate brokerage that's licensed in every state where we operate. Insurance, we're licensed insurance broker in every state where we operate. So we have to check a bunch of boxes that are really more binary than quantitative. And if all that lines up, then we say, okay, here's the markets that we'd like to go into next, and we move on.
Awesome. Interesting. All right. Well, this is a great place to take a short break.
Like what you're hearing? Get more real estate investing news and advice from Millionacres on Instagram at Millionacres and on Twitter at Millionacres_co. Check out our sponsor Mashvisor on Twitter and Facebook at Mashvisor and on Instagram at Mashvisor.com. This episode of the Millionacres Real Estate Investing Podcast is sponsored by Mashvisor. Are you thinking about buying an investment property but are put off by all the work that it takes to find the right one? Then you need to check out Mashvisor. That's Mashvisor. Mashvisor is an investment property analysis software powered by industry-leading real estate data and artificial intelligence that lets you shortlist lucrative rental properties which match your budget and expected return. And all of this with just a few clicks of the mouse. Mashvisor eliminates the need for annoying spreadsheets and tedious comps analysis and helps you save tons of time and effort. Something that really caught my attention is Mashvisor's Airbnb data. They'll provide you with expected Airbnb occupancy rates and average nightly rates with precision that no one else in the market can match. And if you're thinking about a long-term rental, they aggregate data from dozens of trusted sources to show you what monthly rent and occupancy rate to expect. It's unbelievable how quick and easy it is to find both the best areas for investing as well as the best rental properties with Mashvisor. They really go through with their mission to help you find profitable Airbnb and long-term rental properties in 15 minutes instead of the traditional 3 months this process takes. That's because MashVisor provides you with the most trusted real estate and rental data analytics in the market. With MashVisor, your profitable investment property is just a few clicks away. So if you want to find top performing properties quickly and easily, check out mashvisor.com/acres. That's MashVisor, MashVisor.com/acres. And that's not all. Use promo code ACRES, capital A, capital C, capital R, capital E, capital S to save 20% on industry-leading investment property search and analysis. Thanks again to our sponsor, MashVisor.
I'm back with David Friedman, co-founder of Knox Financial, and we are talking about rental properties. So in looking at the Knox website, I noticed that the owners don't have contact with the renters, which I think for some people who are scared of being landlords might be a good thing. But what type of information about the renter does the owner receive, and how does the owner get updates on the condition of the property?
Our customers want to be passive investors. Our owners never get a call from the tenants. The tenants don't have their phone number. They can see their name on the lease, like the tenant signs the lease, they see the owner's name. But you sign up for Knox because you don't want the tenant calling you. That's an important part of what we deliver. I mean, the commitment to the customer is what we call frictionless ownership. You will be you will be a hands-off investor, a passive investor, just like we all are with the rest of our investments in equities. For the second part of your question, how do they find out about the condition? So we do send statements, and we have an app where they can see what's going on. When they sign the lease, we can send the owner all of the background information on the tenant. So one of the unfortunately often overlooked steps is just a proper background check on every tenant that moves in. So we do incredibly deep checking, and actually that data is really valuable in our data system. So we know an awful lot about every tenant, and we store that data securely, and that helps us run the portfolio and offer financial products to the owners and the tenants. If the owner wants to see that information, we certainly can send it to them. It's available in a PDF.
In general, are they keeping track of their properties on your platform, and then they get periodic updates? Is that how that works?
Yeah, so think about it like your statement from your wealth advisor. So you're going to get a statement that says, this is how much rent you received, these are your expenses, this is your net. It's basically a bank statement that you get. And there's some detail in there, like if there was an incident at the property, let's say a broken door or something like that, you'd see that. You'd see when the incident was fixed and the cost. And so you have a pretty detailed view of what's going on.
When you started this company, obviously you've raised money before, you've gone through this. This isn't your first rodeo. What was that process like in terms of how you positioned this to people and how you got your first clients?
When we built Boston Logic, we had a bunch of investors there, and they all saw really nice returns. So initially raising money for Knox, we went back to those folks who had success with us in the past, and about 2/3 of the capital came from that group of folks. We then actually found some really awesome new investors that we hadn't worked with before, but they're incredibly value add folks who were successful in their own right. And so that was sort of the initial fundraising. It was the first time I'd raised money with basically just a PowerPoint presentation. We had no company, we had no revenue, we had Spencer and David and a lot of energy. So it was a new experience, and that was interesting. Then we went out and raised, a venture round, our first venture round a little over a year ago, which was actually the first time I'd raised venture capital. I'd raised all sorts of other types of capital, but not from venture capital firms before. So that was a huge learning process. And we really lucked out. We were working with amazing venture funds now, and very happy with what I learned. It was a lot of work, and it was a lot to learn, but it's valuable for the career I'm in.
What do you think is happening with prop tech right now? I mean, I've been noticing we've seen a bunch of SPACs come out. There's been a bunch of IPOs. There's a lot of activity. It seems like second half of last year, things just went nuts. Are you seeing that too from your vantage point?
We're kind of at the intersection of fintech, insurtech, and prop tech. And in all those spaces, there's a lot going on. I think that fintech and insurtech are probably a little bit more hot right now. Prop tech is, it's been hot, and so it's not as it's not as sexy these days. And you're seeing maturity in a lot of your prop tech companies, with IPOs and SPACs and things like that. I think that the SPAC trend is super interesting. You're seeing companies go public earlier, which is good for venture funds, actually, which is good for the venture ecosystem, which I like to see. Which is good for founders and shareholders and startups. So that's great. I think that the IPO process is or was ripe for disruption. And when you see, Airbnb going public and going up 80% on its first day, and how much money that means they left on the table, uh, a lot of people are going to look at that and furrow their brow and go, okay, who messed up here? Why did so much capital get left on the table? And how do we do this better? So SPACs are an interesting way to change that, and if you can do it without the involvement of an investment bank and all the unbelievable, you know, fees that they charge, that's really attractive.
That makes sense. I want to circle back on what you said about insurtech and being an insurance broker in all of the markets that you're in. So does that mean that you're not working with a separate insurance company on insuring these properties, or what does that look like?
So we don't actually carry the risk. We do work with third-party insurance companies. What Knox has in our portfolio is a growing pool of non-correlated risk-bearing assets. And that is insurance 101. That is something that the bigger it gets, the more efficiency we can find. So we can save our customers a lot of money on insurance. Uh, when we take out a portfolio, we always find that either they're overpaying for insurance or they're drastically underinsured. It's very rare that it's been done right, honestly. The other reality of how insurance works is we don't just insure properties, we have other risk products. For example, we recently rolled out something called Knox Rent Protection. Uh, for 1% of the value of a lease, we will backstop up to 3 months of missed rent payments. And we're seeing a really good sign up rate on that with our customers, because a lot of our customers are investing for reliable cash flow. And what we can almost guarantee, and I don't want to use the word guarantee, but almost guarantee with that, is that you're going to see 12 months of full rent received. Vacancies in our platform are really rare, and if there is one, it rarely lasts more than a month or two. So the fact that we're covering even that third month means you're virtually guaranteed to get 12 months of rent for 1% of the value of the lease. That's a no-brainer for a lot of our customers.
Did this rent protection idea come out of the pandemic? Have you been impacted by non-payments or the eviction moratoriums?
So we really haven't been impacted by that, but it's not what it came out of either. What most of the products we're thinking about launching that we haven't already are purely based on customer demand. So our customers say things like, what can you do about vacancy? What can you do about a tenant that moves out in the middle of the night or gets sick or loses their job? Our customers ask us these questions on a regular basis. And the ones that we hear over and over and over again, we say we ought to solve a solution. We ought to create a solution for that. And Knox Rent Protection is absolutely in response to questions we started getting from day one, before the pandemic was a thing. Before COVID-19 existed in anybody's brain, was, what can you do about a tenant who doesn't perform on the lease? And Knox Rent Protection is the answer.
Was there anything else that happened during the pandemic that impacted you, difficulties with contractors or anything like that?
I mean, the biggest impact on Knox in the pandemic was we had a plan, if you go back a year ago, to launch in a certain way into new cities. And the very most fundamental piece of that launch was, you take somebody who launched a city for you before or worked in a city for you before, and you put them on an airplane and you send them to the city you want to run, because they know how the systems work and they know where the paper clips are, et cetera, et cetera. And say, okay, hire people and train them on what you know how to do. Well, nobody wanted to get on an airplane. Still don't, right? Like, nobody gets on an airplane, very often anymore. So we had to change our playbook, and we spent a lot of Q2 of 2020 focused on our product, our technology, and our systems, so that we could launch a market without ever setting foot there we'd hire one person in that market, but everything else happened from HQ. And I use HQ in air quotes because nobody shows up in our office these days. And what actually came out of that product work was we need fewer people the day we launch a market on the ground. And that's been a really interesting development because it changes how we can scale. It's a lot more efficient.
Interesting. So when you're launching a new market and you're marketing, where are you marketing? Is it to existing investor groups or is it to consumers in general? What does that process look like?
Our marketing sort of does a double lift. We're sort of doing two chores at once. One is introducing Knox as a company. The other is introducing the vertical. Uh, as we've said before, there was Knox. Investing in property came with a part-time job. Now it doesn't. So we need to educate the public in general, saying, hey, when you move, there's another option now. It used to be, you move, you buy, and you sell, right? Now there's, well, maybe I'll buy and hold. Maybe when I retire, I can keep my investment property portfolio. Maybe if my kids don't want it, I don't need to sell it and take the tax hit. So there's a whole new set of thoughts. So in order to sort of introduce that to a market, we start with some mass media. So we're on the radio, we do PR, we're really trying to get the message out that we now exist in that market. We call the people who have inquired already, because people inquire all the time from places where we don't operate. So we call them and say, hey, we're launching in Dallas. We can serve your property now. And then we do a lot of data work, and we do a lot of very direct marketing digitally to people in those markets using the data model that we discussed earlier. So we come up with an audience based on our data model and start marketing to those folks. And so then hopefully the goal is they see us from a lot of angles. They see us on digital media. They hear us on, say, the radio. They see us in the newspaper because we have a pretty good PR presence. And they go, okay, this brand is now here. And now it's a viable thing to do in Atlanta or wherever.
Is there any competitor in your space? Because I would say that the competitors are probably small-time real estate investors. But aside from that, are there other startups or competitors that are doing anything similar?
We say our top two competitors are number one, selling a home, and number two, DIY, do it yourself. A decent number of the people who inquire with Knox choose to sell anyway. Again, we're sort of an alternative to selling a home if you are moving, or selling a property portfolio if you're an investor. Sometimes they just can't make the numbers work, and sometimes they just go, this whole thing is just too new, it's not for me, and they sell, and oh well. And then a huge percentage of the people we talk to are doing this themselves now, or they might be doing part of it themselves, but let's say they work with a realtor to find a tenant every few years when they need one. So they're doing the rest themselves. They're doing their own bookkeeping and accounting and maintenance and figuring out their own insurance, etc. But they might work with a couple vendors here and there. They're not their own plumber, right? That kind of thing. So those are our two main competitors. As far as other startups doing what we're doing, we'd actually really love to see some other financial firms focused on the real estate world pop up. Not that we want competition, but we don't actually believe that competition is a bad thing, right? This is an enormous space, and if Ford had been the only car company forever, we would not have 3 cars in every driveway in America.
Good point. Your last role at Boston Logic, you were very involved in the real estate agent world. Is there any crossover with what Knox does and the real estate agent world in general?
I mean, there is. There are real estate agents who work with investors almost exclusively or for a big part of their business. And what you find is a lot of your real estate investors get to a point where, private investors, where they run out of bandwidth to deal with a portfolio. And Knox makes owning investment properties so easy that if you have a day job, if you are a teacher, a doctor, a reporter, whatever you happen to do, you're in marketing and you want to own investment property, you can do it and not have it impact your life as a professional, or for that matter, a parent and a sibling and a child of other people. So it gives you back your life and allows you to expand the portfolio. So realtors can refer customers to us. We offer a referral fee back to them, so they get compensated, and it allows their investor clients to grow their portfolios and without taking on a burden on their life.
Makes sense. I was just wondering, since you mentioned that a lot of people decide to sell anyway, if you had a referral system in place to refer them to real estate agents.
We do that. The other thing is a lot of our clients are looking to expand their portfolios. So what we refer out more than sell side transactions is saying, hey, this client over here wants to add 3 properties to their portfolio. Meet this real estate agent over here. He or she will help you find those properties. And we might even refer them to a couple realtors in a couple different markets so they can have a little bit of geographic diversity in the portfolio also.
Interesting. So, how many of your current clients are multiple property owners?
I don't know off the top of my head, but it's at least a third, I would say. I don't think it's half, but it's probably somewhere in there.
So, people are using this really to develop their portfolios and then expand and kind of grow within the platform. Does that mean that they're investing in multiple markets?
Some are. I'd say what we see more often is people looking to expand their portfolio, and their first thought is, I'm going to do it near where I live or in a market that I know. So, very common in real estate acquisitions is somebody is, let's say they had a successful career in Silicon Valley, right? They had an option payout a year or two ago. They say, hey, I want to diversify into real estate, and they grew up in Dallas or they grew up in Atlanta and they start, or New Hampshire, wherever, they start buying property elsewhere because they feel, hey, I could try to buy in the Bay Area, but everything is so expensive. I can buy maybe one property and the net cash flow is going to be mediocre. It doesn't feel as safe to me. I'm going to go buy 4 properties in Atlanta and they'll be profitable and they'll grow in value. And that makes some sense. So you see these really interesting distance buyers building portfolios. Um, they're not always really diversifying across markets, um, but that's something that we're bringing to them, right? So a lot of them are thinking, hey, I'm going to buy in Atlanta. We say, hey, have you thought about diversifying into Houston? And they go, huh, I hadn't thought about that, but I guess if it's all with Knox, that makes it a lot easier. And it's, again, we're sort of educating them and opening up a new possibility.
Obviously, last year was crazy for residential real estate. I think in just about all markets, we're watching the existing home prices go up and up. Is that something that you're thinking about? Are you thinking about when this crazy market ends and what the next cycle is going to look like?
So interestingly, in late 2019, there was a bit of shakiness in the real estate market. I don't know if you remember.
Yes.
And so our phone started to ring and people started to say, right around October, right? They started to say, our property's been on the market since May or June. Um, it started out at, I'm making this up, $600,000. We reduced it to 549. We're now halfway through the fall market, and our realtor says we should reduce it to 509. We don't really want to do that, right? So they're coming to realize that their property, for whatever reason, was sort of a victim of a softer market at that moment. And that's why they were calling Knox, because they had a lot of confidence that someday it would be worth a lot more. And they didn't want to do more price reductions. They didn't want to take 100 grand less than they originally had been told by their realtor it would sell for. So there definitely might be some adjustment in the real estate market. We expect that from time to time. Real estate markets don't just go up. We all know that. And in those scenarios, we think a lot of people will look at holding as a better alternative to selling. And that would mean that Knox is in a really good position.
In terms of the parameters of the types of properties that Knox brings on, do you have any highs and lows of what you will bring onto the platform?
We don't. Knox has a fundamental philosophy that everybody deserves a safe and comfortable place to live. We will not take on a property that's not well maintained. Doesn't have to look like the Taj Mahal, but it has to meet our safety standards. We do a health and safety inspection in every property. Um, we, if there's an outlet cover missing and there's wires sticking out of the wall, we require that repair. So we do believe that there's a budget for almost every home, so long as it's in decent shape. And we have properties that go for $800 a month in our platform, and we have properties that rent for $8,000 a month. And everybody should be able to live in a property and be comfortable and live there with dignity.
I love that. So you've obviously raised some money, you're expanding into different markets. What other things are you looking at as the future of Knox?
We have had so many requests from customers for to solve other problems in their, in their financial sphere, in their risk sphere, and around their properties. So, and from tenants for that matter. So we're going to be rolling out other products. I'll give you an example. A lot of our clients, they have a reserve with us, but maybe their boiler dies, right? And thought they were going to get 25 years out of that boiler, but 19 years in, their boiler goes, and the cost is more than their reserve, and that's a challenging hit on their cash flow, right? Who knew? We're going to probably offer the ability to finance that purchase through Knox. So if we can help them flatten the ups and downs of their cash flow capital purchases, that'll be something we roll out. There are tenants that are looking to finance their security deposits. We'll roll that out. We already offer renters insurance, but renters are asking us, hey, we love working with you guys. Do you offer auto insurance? Do you offer all sorts of other financial products they need? So we'll be rolling out other financial and insurance or risk products as time goes on. We'll probably be offering some kind of a mortgage offering as well, what we call equity financing, whether it's mortgages or home equity loans or refinancings. We will likely be offering those as well.
Interesting. Well, that kind of brings me to my final question is, I followed your career for a while. You're a serial entrepreneur. So is Knox sort of what's it for you? Or are there other ideas you're interested in solving? And would you be solving them through Knox? Or is there something else that's kind of, that you're thinking about?
If you put a bunch of smart people in a room and you look at our data model, you come up with 100 products we can build on the Knox platform. We're not in a shortage of things that we can solve with Knox. That said, we try to stay focused, and we don't run after every opportunity. We run after, say, one a quarter or one every 6 months or something like that. I do see opportunities in residential real estate every day, and commercial real estate and retail. I think there's all sorts of opportunities in retail because retail is going through such amazing change right now. Retail spaces can be used in so many interesting ways that they're not being. But I am intensely focused on what we're building at Knox because we think that, we know that real estate is the way people build the majority of their wealth, and there's nobody helping them do that. There's fantastic people helping them buy and sell homes. There's fantastic people helping them build homes and add additions, but nobody's helping them with those homes as an investment, even though it's where they are actually investing. And we think that opportunity is enormous. So we're very focused on realizing that opportunity and making it a really long-lasting and reliable company.
Are you ever interested in expanding into commercial? You mentioned retail. Obviously, hotel is another area that is going through huge transition. We may see a lot of conversions to multifamily and things like that. Right now, it sounds like you're mostly doing single family. Are you also doing multifamily?
We're doing multifamily up to a point. So a lot of the properties that come into the Knox platform are 2, 3, 4, 8 family properties. There comes a scale when our model doesn't make sense, right? If you have a 300 unit property, you probably have full-time people on site. Makes a ton of sense, right? So at somewhere our model doesn't make sense, and that's fine. We don't try to compete on that level. As far as commercial property goes, say like office or the other piece of the retail market, we're very focused on residential. We do have some commercial and retail in the portfolio because you'll have a multifamily building that maybe has a retail space or two on the ground level. So that does come in, but we don't really focus on that. And if it came to placing a tenant in that, we would outsource that.
Well, this was fantastic. Thank you very much for your time.
This was great. Thank you. I enjoyed the conversation.
Just a reminder to our listeners that you can find out more on knoxfinancial.com. Stay well and stay invested.
Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. If you have any questions, please feel free to drop us a line at help@millionacres.com. Get more real estate investing news and advice from Millionacres on Instagram @Millionacres and on Twitter @Millionacres_co. Thanks again to Mashvisor for sponsoring this episode. If you want to find top performing properties quickly and easily, check out mashvisor.com/acres. Use promo code ACRES to save 20% on industry leading investment property search and analysis. People on this program may have an interest in the deals, offerings, or services they discuss that Millionacres or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.